All
maybe.
right, this video is just going to be a Zoom ad on top of it. Whatever.
Oh yeah.
All
Yeah.
right, fuck it. We're doing it live. It's live showbiz.
Should
Um,
I not pay my bills? Is that why? I haven't used this app in a
yeah, you gotta
year.
pay your bills, man.
I don't
Um,
want to. I don't want this.
all right, let's just go over the market real quick, I guess. Bitcoin first. This is this is great price action here. Pure, just pure carnage. Just liquidate everybody.
Oh yeah. Both sides.
Love it.
Nice.
You love to see it. Um, what's your current allocation like? Are you fully deployed right now?
No, not really even nearly. I'm probably like 50% of the crypto that I want. I have that right now, which is like pretty high for me because I was coming off of like a very low base. Um,
I think 50% is 50% sounded like too little yesterday, but now it now it feels pretty good. Feels pretty good. Um, yeah, something feels weird in the market right now. I don't know what it is. Maybe it's just because I've had a massive anxiety all day.
well, like
Um,
I think while you were editing your windows, I was saying that tomorrow is the date when we know if the Bitcoin ETF gets approved or not. It's the deadline.
oh, it is.
Yeah, tomorrow's the deadline in this window, and if it doesn't get approved tomorrow, then we're waiting till January. So I think that probably explains
Well,
maybe
I
why.
saw they were kicking the can on one of the there was like another futures ETF like hash or something like that, and they people were kind of freaking out a little bit because they inserted some language that made it sound like they were gonna just strategically delay this stuff, and then it was really confusing because we immediately like uber pumped on that news, which is kind of weird. Yeah, Kevin is saying he thought they already delayed it. I don't know if that's the case. This isn't a news podcast. We just hang out and draw some lines and speculate. Um, yeah, I mean, objectively speaking, let's look at our friend Ethereum because although I feel kind of crappy about Ethereum right now, if I just sort of objectively look at the chart, I mean, we had just like mega bull candle, and we're sort of just retracing into the gap right now. Um, we haven't we haven't broken market structure. Like market structure is basically sort of messing that up a little bit. But yeah, this low here is the one you don't want to lose right now.
About 1850.
1850. Um, I kind of feel like in crypto, a lot of the times where you look at a chart when everything's pumping, you always have like oh, I want to get in here. If it retraces here, this would be such a great level to get in.
What do you call that? The origin of the move?
Yeah, our origin of the move. You can call this an order block. This is an important zone because it's the zone that broke structure,
Hmm.
right? So this was like a huge break. Like this is like actually like a higher time frame market structure break. So you're laser focused on the area that created that because you should be getting like a really nice reaction off of those areas. If not, you know, to new highs, like at least like a pretty significant bounce most of the time. Um, so as crappy as everything felt today, and it's like kind of chaotic as the hourly chart might look, like everything is still okay on higher time frames. I mean, the weekly is just white. Maybe I should upgrade to the green candles, but it's just, yeah, just green. We just like four mega candles, and then last week we had a good close too. Like we closed the weekly above that 2028 level. So all really good signs, right? The the problem that I see with Ethereum, like if you zoom way out to like a 3 month chart, just get like a really big picture with this thing. The kind of critical range for us right now is this quarterly range from April to June or so of 2022. Like that was the really nuclear move. Like we went from 35.79 to 8.88
Ooh,
in one quarterly candle. This is like one of the worst quarterly candles, like at negative 74% in one quarterly candle. So all the price right now is kind of contained within this quarterly candle. And there's kind of some interesting stuff going on here. You can see right now we're basically struggling to get above the mid range,
mm, yeah,
and mid ranges on these quarterly candles are often like very strong areas of support or resistance because there's super high time frame levels. But we've also got a like a 3 month fair value gap there. So that's been we hit it one, two, three times. We've never closed above it. I think
that's
when we
scary for
do
you.
push through this area, not really. Like I think we're bullish, right? I think we're very bullish. I think if you pull up like a weekly chart, like this thing looks like it wants to go higher. The problem is it could for sure do something like run this high and then kind of get back inside and dump again. And this would probably drive people crazy. It would probably go a little higher than that. Like it's very plausible, right? That you kind of run that high and you get a little above the mid range, 22, 2300, and just dump back in. And that could be a nasty move because you get all these people like, oh, we finally broke through the level. Everybody hops on board. They amp up the leverage. They play the breakout trade. And then we just nuke back to like 1730 or something, um, which would
Yeah,
be really gross, but is not like out of the question even in a bull market. I mean, we always get 30% pullbacks in bull markets, and that's just like 25% or so. So that's like par for the course with the volatility of ETH. So I'm dialing back the aggression at this point. Crypto in general is kind of in a weird spot. It seems like some altcoins actually look pretty good, but some of them look a lot worse on higher time frames. You could kind of really pick and choose your battles there. If I was like a betting man, which I am, I think this is easier to see on the Bitcoin chart. Like the Bitcoin chart right now has these like two like equal highs right here.
that 38K.
Yeah, so like, yeah, and it's right. Yeah, nice round number, 38K. Like I'm guessing if I pull up like high block, there's probably like a lot of short liquidity out there. Like when I checked earlier, there were like way more short liquidations on ETH than long liquidations, right? And sometimes when you have that imbalance of like shorts in the market, like the price tends to like run all of that liquidity before uh going the other way.
Yeah. So what do you see on Bitcoin here?
I mean, it's nothing crazy. Like Bitcoin, the magic number tends to be like 30 billion on this thing. I don't know how they get these numbers. I don't know if it corresponds to like actual you know it seems like it doesn't match up with stuff on Coinalyze, but it seems like interesting data for if you just kind of understand how to use it for what it is. But you can see like there's obviously an imbalance here. There's a lot of it's like 300 million bubble above the high. I think ETH was a lot more imbalanced actually last I looked at it. Like people were really shorting, and I when I was on Bybit, funding was pretty negative too. But yeah, like so ETH here is like really like this is a pretty big delta for
Yeah,
ETH.
that's way more extreme.
Like negative 5 billion. So when I look at this, I see like a lot of fuel to the upside. I don't see a lot of fuel to the downside. When I look at Bitcoin, I see two equal highs above, and I see the same situation where like although we've had this shitty price action, right? Like market structure looks like, higher high, lower low, and then the higher high here. And we've come back down, but we haven't broken this, we haven't broken this low, right? So it's technically bullish structure on like the higher time frame. People are kind of short-term bearish. You've got equal highs above on Bitcoin, and then you've got the Ethereum liquidity profile that looks like that. And then you have price, you know, not taking this low. It's kind of like a, it could be like a double bottom there. And sometimes when you get a double bottom, price goes and it, runs the highs that made that, so possibly all of these highs. And that would kind of correlate with what I'm saying, where you finally kind of purge this 2167 high here, maybe even get up past that mid range we were talking about, the quarterly mid range, 2200 or so. Yeah, just above this. So yeah, like 2300. And then that could set the stage for the longs getting a little too excited. And then we do the whole thing back down. And then if you look at the move up, it's just, you got equal lows here. You got all these untapped lows here. You've got a whole bunch of untested lows here. You got a gap here. And then you have this entire this is basically just an entire weekly breaker. Like the price is never touched. So this is like an area where I'd probably feel good, like YOLOing a little bit. Like if
Yeah,
I get
sorry,
price
at
coming here and I've got
$1,500,
some
of course.
spot and maybe I'll open a maker vault. Maybe I'll juice the leverage up by 10 or 20% or something, buy a little more. Like this would be like an interesting level for me. Because it's like a higher time frame level. Like this is market structure on the very big time frame looks like that, right? So even if you get this nuke here, right, and you run all of this and it looks really, really messy, like this low, at 1500 or so, that's like the line for the bull market right there. Like, and if we lose that, I don't know. It's 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 not good, right? So the closer you are to buying here, like the closer your buys are to the point where you can kind of get out of dodge. The problem with YOLOing here, you're sort of YOLOing into resistance, and then price can move against you a lot, liquidate you a million times, and then it could get down here and then rip right back up because you're so far in a premium of this leg here
Can I
with
ask you
your
a question
buys.
on how you approach it? So you showed the high block capital data. Like when you're using that, like how often do you use that first? And then secondly, would you use that data for more short-term tactical levered trades, or is that actually informing your long-term buys, spot buys?
I mostly longer term like to look at high blocks. They have another one, the heat map. The liquidation levels are really good if you're doing intraday stuff. Like the data doesn't go back that far on it. So I think it's the heat map. Like the heat map goes back a bit. And if you pull up the heat map on ETH, you're probably going to see a really bright yellow zone at the highs, I would guess. I mean, you have that on Bitcoin. You can see you got a lot of liquidity up here above
So what does that
38K.
what does that heat signify on the map?
This signifies buy stops, people who have gone short this whole way, they have buy
Mhm.
stops above the highs. So when price goes into the yellow area, it's going to be drawn to it, right? Like price seeks liquidity. And
Got it.
this
So
is
those
where
are just
this is where a whale, like a large, a smart player is going to be sitting, passively with limit orders because you can't market buy $500 million of Bitcoin. I mean, people have done it, I guess, on Coinbase from time to time. Maybe not that much, but it causes quite the displacement in the market. So
okay.
if you're trying to get a big fill, you're placing your orders where other people's stops are to go in the other direction. So that's what you can see here on Bitcoin. And then if you pull up ETH, it's probably I would guess ETH is probably even more. Yeah. So ETH is a very bright line there at 21.25, and that makes sense with like the chart, right? You have two very high time frame levels here, right? Because you get this one and you get this one, and these are basically like higher time frame equal highs right now. Like we haven't run that level, and like whenever you have like highs like this, they're liquidity targets, right? Like when price is moving, it's going towards something, right? So right now we are in this leg off the bottom, right? And price is seeking something, right? And it's either consolidating, it's like expanding, or it's like sort of retracing. Is this a retracement leg? No, that doesn't make any sense to me. Like I think this is like an expansion leg from this consolidation area. And what is it expanding towards? Well, maybe that high, but we took that high and we closed very solidly above it, like very solidly above it, right? So it'd be very weird for me to take this high so strongly, to break structure, because this was a structure shift, right? Because you had your price kind of here, 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 and then here, right? So you're
Yeah.
putting in a structurally higher high there. So you're shifting market structure. Um, so very, very bizarre to me that you wouldn't be coming for this high, like at some point in this leg. Um,
And we didn't get there technically. Um,
we haven't yet, but it doesn't mean that we won't, right? Like
yeah.
if you zoom this out to like a 3-day chart, this is a setup you frequently will see on like a 1 minute chart, like when you have like an expansion leg coming for like maybe like an hourly high or a daily high or something like that. When you see price push really strongly, right, it creates these gaps. You see often these gaps, they don't get filled on the leg up a lot of the time, right? And here we have a gap. It's very, very, very common for price to basically create that gap, stop a little short. And especially in crypto, which trades like a little less cleanly than TradFi. Like you very frequently see price just tap into the gap and then go, and then come down, and then it taps the demand zone, and then people are like, "Oh, good, I can buy here." But it's already taken the higher time frame level. It's already taken its target. So you get something like this, and
And
then it
it's
goes through that
over.
zone, and then it invalidates all these zones. Like all of these zones are protected on the way up because you have larger players who are moving price. They're protecting their orders, right? But once those larger players get to where they're going, right? Like so they're accumulating down here, and then they want to distribute above this high. Once they've distributed all their orders, they're not protecting that anymore. So as price comes down, it just goes to that level. It goes to that level. It goes to that level, and then we sort of start the accumulation game again, and back up we go, like hopefully. And this takes place on all time frames, right? Like if you look at like a much higher time frame, like I think Bitcoin especially is like this is very obvious to me, and it's something I've talked about a lot on my podcast for my other podcast, Magic Lines, on my channel for people who haven't seen it. Like this is a very high time frame accumulation zone for Bitcoin. This is like a very distinct manipulation below that accumulation, followed by a leg up, break structure. This is like the go time signal. You get your retest here. This is where you get in,
That's
and
where
now
you
you're
buy.
riding this up. And even though these are like pullbacks, 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 like if you zoom like way out on this structure, it's just one big line up, right? And this one big line up is going somewhere. Where is it going? I think there's two obvious places it's going. It's either one just going to this like huge monthly supply area, and very frequently when that happens, you'll see it go to like to the mid range of that, so 40,651, a probable target, or it's going for this monthly high, right? Um, I tend to believe it's going for this high. We had a shift on the monthly here for Bitcoin. Like we have had like a monthly break of structure on Bitcoin in a way that we haven't really had on Ethereum. I would argue Ethereum hasn't really had this yet, but Like on a monthly chart, like that was originally your protected monthly low. When we get a close below that, right? So this candle closes below that. That this was November FTX. Um, the high that created this low becomes the protected high, right? So that's this high up here. So once price shifts through this with this big candle leaving this gap, and again, like we actually talked about this a little bit over the summer when people were kind of freaking out. Like one of the things I was pointing out is that like, hey, a lot of these dips, if you zoom out, this is just like a monthly gap, like price on the lower time frames, although it looks crazy. On the monthly, it's just kind of retesting this imbalance, and that could very easily just be an area of support. It could go higher, and that's exactly what happened. And that's sort of what we were talking about earlier, right? Where like the actual demand zone, like if you zoom in on the daily, is like this wick here. But price doesn't, it never really got in there, right? Like that never really got in there, and that never really got in there. Like the gap was your entry in a very, very strong trend. And if we went down in there and kind of stayed there a little bit and bounce, like a lot of people would have been like, oh, I got filled, but like maybe not. Maybe that's a bounce and then you go through. So
So like, does that apply to ETH right now? Because with ETH, you have that big, strong move up that creates the gap, and we're now kind of like retracing into that gap.
yeah, the ETH monthly chart doesn't look as good as the Bitcoin monthly chart, quite frankly, because if you try to do any sort of structure on this chart, right? Like this is the low. Where did this low come from? It actually came from up here. So it's not very useful to be like, oh, I'm only going to trade Ethereum when it breaks monthly structure, because you're going to wait for it to go to like 4,000 and then retrace and what, get in at 35 or something. I don't know. So that's why I've been using the Bitcoin chart for a while as like the bellwether for ETH. They're correlated. The Bitcoin chart is very clean. It remains very clean. I've especially always liked the 2 week Bitcoin chart. Like I think it looks super clean. It's just, and it's funny to go back and look at, people were freaking out over the summer, right? Like, so this is your low, this is your high. We never close above this high. So this isn't even really like a higher low by my standards. By my standards, like this is the low, this is the high. And then all of this is just a range. But people were having a heart attack this summer at like 25K. In reality, price isn't even like testing the demand level, and then we just yoink up from there. Um, but like I was saying for ETH on like the monthly chart, it's not as interesting. Like there's no, like Bitcoin has that structural break, and ETH doesn't, just because of how it works. Like if you pull up like a if you pull up a 2 week chart, even still nothing. I think if you pull up a weekly chart, there's a shift there, and so there is some lower time frame shift for ETH on the weekly. Yeah, yeah. Like some people might be like, okay, we did it here, but even then, like we did get a close above this, even though this ended up just being like a quick rejection and back down. That is in my mind like a sign that price does want to go higher, that it's not just going to dump all the way back down to the bottom. And that's kind of what we were talking about earlier, where we're basically just, this is kind of the demand zone that gave us that high, and then price has just been slowly retracing back into it, and then we accumulated in that zone, the zone that broke the high. So super key zone. Your zones that break your higher time frame highs are like really key for buying. If you're like a longer term investor too, this is like a really interesting thing to look at, because you're not on the 5 minute chart or the 1 minute chart, right? You want to buy on like the monthly and the weekly, maybe enter on the daily, but you sort of are making, you're getting your bias and your sort of your higher time frame ideas from like the weekly or the monthly chart, and then maybe you're using your dailies, your daily closes or whatever to kind of inform the entries. But like you don't want to be trading like Bitcoin cycles on like the hourly chart. It just doesn't make sense. So
So that's
identifying these
helpful because
areas
like,
is useful.
so like here, I mean, based on what you just showed, which was very helpful, thank you. Like, I mean, the obvious long would be if you get that retrace down to like 15, 1600 at that like demand zone. I mean, that would be an obvious long. But like for me right now, I felt like I had to buy some on this little dip because, like you pointed out, we're at this like 50% level where it could just break through. It doesn't even have to go down all the way.
Yeah, I think there was a pretty good case for buying here, even though you're sort of buying into resistance. Like I bought today, like I was a little more careful with my buys. Like I didn't buy up here. I bought like below the open, below the Monday low, below a bunch of like if you're bullish on the day, if you're bullish on the week, you want to buy in the wick of the candle, right? So if you're on this week here, right? Like you imagine you just see this candle happen and this candle happen and this candle happen. When the next week opens, you're like, what is price going to do? It doesn't take a rocket scientist to say that price is likely to go up next week. You just had three mega candles and you have this obvious high right here. So when you start your week and you, as a trader, and you know where price is going to go on like the weekly, right? You're using that bias to inform your decision. And like, although it's easier said than done, the goal is to buy in the wick of the candle, right? The bottom wick if you're bullish, and then you capture the expansion move above your draw on liquidity. That's what you do, right? So when you have the weekly open, like so the weekly open for this week, last week was this level here. So if you're trading on like the 4 hour chart, you might be watching the weekly, and like you can be a swing trader and have like a full-time job and put on like one or two trades a week and trade with this system, and it's totally fine. It's like it's doable, and you can make nice gains kind of doing this. But you're like, okay, well, I know that I'm a bullish bias on like on the weekly chart, right? Or weekly open is here on Sunday. So when Monday happens or some point in the week happens, like there's different kinds of weekly profiles, right? Like you can have like but like a common one might be like, oh, you range on Monday and then you set some sort of initial range, and then Tuesday you have like a manipulation move in the opposite direction of the eventual move, which is this wick, right? So when we look at the weekly candle from last week and we see this wick here, when you zoom into the 4 hour chart, this is that wick, right? And what is this wick really? So if you analyze this structure, this was the previous high, and then we close above here, we put in a new high, which makes this the structural low on the 4 hour structure, right? And that means that this entire downswing here, right? This is sort of like a demand zone where when price taps into it, it should have a bullish reaction because this is where buyers stepped in to push price to a new structural level. So when you see the week opening, here, and you're expecting a bullish candle, right? And if it's very, very bullish, you may be like, I'm not going to get like a huge wick, right? I'm not thinking like the wick's going to go like half the length of the candle and then up, like when I'm just seeing like bull candle, bull candle, bull candle, bull candle. So I'm like mentally prepared. It might be a short wick, right? So what you want to see on lower time frames, right? So on the hourly chart, or even like the 15-minute chart, like this wick wrecked some people, right? Like this was like this is basically obviously like an area of accumulation in hindsight. And this wick down, it runs like all of these stops here, right? It actually taps into the exact 15-minute, like this is a really lower time frame zone, but like this is the last actual down move that broke structure. This tiny little area here. That was the bottom. That's what we tap into, right? So this is sitting within a 4 hour like higher time frame swing, right? So the setup is you're looking at accumulation, consolidation in the beginning of the week. You're expecting a candle to the upside. You're trying to get in on the down wick, which means you're trying to get in below the weekly open, which means you're looking for a move that runs a bunch of liquidity on the lower time frames like this. But on the higher time frames, this move here that's not even a dip into the 50% of the zone. Like, so this move does nothing to break the 4 hour. It does liquidate a bunch of people on the 5 minute, the 15 minute, and even the hourly chart. And then those liquidations are sort of the fuel for us to go up, right? And then after those liquidations happen, and I want to stress that a lot of this like looks really easy in hindsight, but as you do this in real time, it's quite difficult. It's very easy to kind of back test a thesis to a chart, but catching this in real time is tricky. But like if you're trading with this like higher time, like I'm making a trade on the weekly, I'm using 4 hour levels, but eventually maybe I want to enter on like the 15-minute chart, right? So that's where I enter. But then like what I have here is like similar concepts we've been talking about, right? So the zone that breaks structure to the downside is this. So this is the consolidation that gives us this down move that runs this liquidity into this demand zone that broke structure, right? This is a manipulation. Sharp move below the range, run liquidity, sharp move back above. And then what you can do, and this is a pattern that happens over and over again. Like I use this over and over and over and over and over again. It's like you enter on the retest of the zone that broke the structure.
Yep.
You know, you could like some might also say, oh, I want to enter on the zone that actually breaks structure to the upside, versus like you could say like this is like a breaker, right? Versus this is kind of like an order block down here that shifts structure up. But when you have like really aggressive price action, like you can see that price here, it goes into the breaker here, but it doesn't touch like the last demand zone down here that shifts price up. Like this is just a straight move up. We never actually retest that, and then we go. But if you've identified all of this stuff, you can enter right on the retest, like even at the top of the zone if you want. You put your stop below that swing low, and then if you knew on the weekly chart that you were targeting this weekly level, like because this is every time you make a trade, you want to have a draw on liquidity. Like where is price going? You don't want to just trade and then be like, oh, I don't know, I'll get out when it looks bad. That's not really how it works. But if you did that, then boom, you're set. You see how on the 4 hour this looks like, where do you get in? But when you zoom in on the 15 for your execution, it's actually pretty obvious where you get in if you set all this up. You're targeting this zone, you get in right there. You have very little drawdown, and then you have a 4.4 to 1 risk reward to that high, and you can of course just like take 80%, leave a runner, and go for higher targets. But that's kind of how I approach like a weekly swing trade, like something I might want to get in on like a Tuesday and get out on like a Thursday or a Friday, or maybe hold for like multiple weeks. But that's kind of like my process.
That was pretty cool, man. That was helpful. Thank you for that tutorial. I was thinking maybe we should zoom out a little bit and
Yeah,
talk
let's do that.
towards what the title of this episode is. And you
Mm-hmm.
mentioned that Bitcoin is kind of your bellwether, your identifier of where the market's going, and you think Bitcoin's going higher. You pointed out like a $40,000 target or a 48K level. So you think Bitcoin's going higher. Um, does that also make you believe that Sol is going higher, even though Sol has had a pretty massive run?
I mean, the short answer is like obviously yes. And you as a sophisticated investor, you understand the concept of beta, right? Something you think about your portfolio construction. To simplify it, like a high beta asset, it'll go up a lot when sort of like the benchmark goes up, and it'll go down a lot when the benchmark goes down. It's sort of like it's sort of like a leveraged return in a way, although that's not really true because you can't like lose all your money on a 20% move in a high beta asset the way you can lose it leveraging anything.
Totally.
But it's kind of an easier thing for people to grasp.
Yeah.
Um,
And I think people do um, enjoy reaching for these like higher beta assets. You know, they want to make their 10x, 100x's instead of like, you know, a nice little 40% gain.
I totally get it. And like there was a time where I was like really trying to make like 100x. Like I don't care about making 100x's anymore. Like if I can make a 10x, like I'm really, really golden, right?
Particularly when
And
it's like with certainty and without
yes,
massive volatility.
yeah, the thing people don't think about a lot, but they should think about is like they're just thinking of in like absolute return, what is going to go up the most? But you typically don't have return without volatility. And like people who are really sophisticated in building portfolios, like they're thinking about, they're thinking about things like Sharpe ratio. They're thinking about what is the ratio of my return to my risk, and they're not optimizing for like max absolute return, right? And you can do interesting things when that when you get that concept, right? Like although like I may think that with like 90% certainty that top to bottom Solana outperforms Ethereum this cycle. If I'm like a sophisticated investor, I can mimic the returns of Solana with ETH. I can use leverage. I can use options. There's things you can do to sort of juice your return, and you can do so in a way where your risk is controlled, right? So you may be able to get the same return profile as a Solana, but with like less risk by using these like additional instruments, right? And I understand like 99% of people in crypto and nobody watching this video is doing something like that, but it's like something I think about. Or the other thing is like, okay, like if my portfolio was 100% Solana, I might be cool like putting 10% of my net worth in Solana. But if my portfolio is 100% Bitcoin, like I'm probably okay just YOLOing my entire net worth into Bitcoin. So even though Bitcoin's return profile is lower, well, my position size is 10 times larger. So that's like also something else to think about when you're building a portfolio. And I'm sure this is all stuff that you think about because you do this more than I do for people.
Yeah, well, I think you're absolutely right, and I sort of extend it beyond even crypto use case. You know, I actually we've talked about it on the pod numerous times where I feel like the best way, like the most capital efficient way to actually get crypto gains or crypto exposures through Coinbase, particularly like through Coinbase options. You know, like you basically I'm buying like way long dated call options on Coinbase, which ends up just being like a levered common stock bet. And those are fucking printing. You know, maybe
Yeah,
not to the level that Soul is, to be honest. But like, I don't feel like I want to take the Soul risk. You know, I don't want to be buying this.
yeah, for sure. And like coin has other nice things that come with it. One is just there's a certain coziness of just having stocks and like a brokerage account, right? You don't feel like something horrible could happen to you at any second, right? There's that. But then if you're an American, having access to options is like incredible. And like if you're not on Deribit, like I don't know what you're gonna do for like Ethereum options. Like there's
Yeah,
not like a really good solution. Like
the
you can
on-chain ones suck.
yeah, on chain is terrible. I know that if you're trading Bitcoin, you can use a kind of micro strategy as a proxy for it. It's obviously not one to one, but it's pretty good. You can kind of hedge out some of your portfolio risk doing that. Um, but like I was very loaded up on coin. Like I was like a very vocal coin bull this summer and bought a lot of coin, at like $48 or $50 or whatever. Um, but like when you get up really, 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 really high and price starts looking a little heavy, like I don't want to sell the coin. I don't want to realize those gains. I don't want to have to buy back in or like I miss it and then it goes high. Like I don't want to do any of that as a long-term investor. So it's nice to be able to like just sell calls. Like you sell
Yeah,
at the money calls, you collect a very nice stream of income. Like if you're selling at the money, you need to be a little more sure about where price, you're kind of trading it, right? You're kind of shorting the stock in a way. But
Getting paid
like,
to short it.
but one of the nice things is like, so I sold calls for November, and then when price went sideways here, like if I shorted coin, I would have just gotten chopped up and
Yeah.
made no money. But because price went sideways, I sold calls at like I think I sold like $87 calls. Um, those printed. So,
Yeah,
and
you
there was a
did
time
pretty well.
where price had dipped a bit. It wasn't looking good. It dipped into the 60s. But like all that income I had made selling those like calls like made me feel a lot better, made up for like the losses like there. And like and being able to do that is so nice. And I hate that I can't do that with ETH. And it's like one of the biggest things I'm looking forward to with the Bitcoin and hopefully the ETH spot ETFs is that those ETFs are going to have hopefully like very liquid options markets, which will be really nice.
One day, yeah, that would be freaking awesome. I would love that. But I think like you bring up something pretty interesting because the way that you're selling the calls on Coinbase is like way more aggressive than I like to do it. And I think it doesn't make it right or wrong. It's just like a risk tolerance thing. So I'm always selling out of the money calls on coin, and it's like pretty far out of the money. So I'm short the 150 strike call right now, and for me, I think of that as kind of like free money. Like I don't think Coinbase is going to go to 150 in 2 weeks or whatever. So I just capture less premium than you're getting, but in my mind, it's like that's just kind of free.
Yeah.
And if it does go there in 2 weeks, like I'm still making a ton of money on the calls, and it's basically a way to realize the gains. So it's just a different style. Like I'm more risk averse. I don't want to be like selling coin at 87, rather sell at 150.
Yeah. Well, I mean, if you're not covered, you're
Yeah, yeah,
taking
if
on a
I'm
lot of
covered,
risk, obviously. Well, options when you're way out of the money like that, the delta component is like plays a lesser role, and something like volatility. Is it like so as a trader, right? Like I'm looking at the chart and I'm thinking this price is high. I'm betting that price won't go up a lot. So you want to be exposed to like an option contract that's like high delta because it's going to more closely mimic price. Whereas if you're selling options to hedge, but your option is actually just like short vol, like there's a bunch of situations that could come up where you could actually kind of lose in both things, and you're not really betting on the thing that you think that you're betting on. So if people are going to play with options, they should
yeah,
understand like the different components of
that
them for
is interesting
sure.
because I didn't realize it just clicked with me now that you're making like a delta play and I'm making an implied volatility play. Like Coinbase price jumps from like 84 to 95 in a day. Like that the volatility spikes. Like those option premiums are going to be really high. And that's when I can get paid on like a really ridiculous strike that's far out of the money. So I'm
Yeah.
like selling the implied vol.
And sometimes I'm doing both, like the riot play. Like I've been buying $15 March calls, right, which are like out here. These are out of the money, right? So they definitely have a much higher vol component, but like I'm okay with that because I think vol in crypto in general is still kind of cheap. Like it was really cheap like a month or two ago,
So cheap.
but still underpriced. And like these miners can explode in volatility, right? So you have an opportunity to double dip. Like if you have a view on vol going up, and then you also have a view on Bitcoin going up a lot to the point where it's going to like really juice the miners, then you can kind of like have this trade that does both things for you. And that's kind of what this is for me. This is like just a way for me to add some kind of convexity to my portfolio. Like if Bitcoin just uber rips to like 100K, like ETF comes out and it's just everybody's completely losing it. And I'm like a little bit underexposed to Bitcoin if that happens for
Yeah.
sure. But like these will hopefully print
It'll be higher
in
beta.
that
I mean,
instance.
this position will like outperform Bitcoin if it does move like that.
Yeah.
And I don't like buying these like lottery tickets mostly, but I agree with you that these ones do make sense. They're cheap enough and like probabilities high enough that I would and I am on the same trade.
Yeah. And you have another option too, as like a speculator. Like you don't have to buy. Like the problem with these things I bought here is they can go to zero. They can become completely worthless very quickly, right? You have the option of buying options that are leaps, that expire out here and at the current price, right? So you have a lot of time to get out of that for like with still a lot of your money intact if something happens in the market, right? There, but the downside is you're just going to get less leverage. They're going to be more expensive, but they will decay far less and a bunch of circumstances for you. So I think, but I think leaps are good for a lot of people because I think when people are trading options, like, and they like it just it kind of accidentally makes more sense for what they're betting on in a way.
I agree. It's more like just buying the common stock, and it's just like a cheaper way to get more shares.
Hmm. All right. What you want to pivot back to Solana for a little bit because
Yeah, let's go
I
back to
want to
Solana.
get your take on Solana, Bitcoin, ETH, maybe everything else, just from how you think about building like a longer term portfolio.
Yeah, so I think when we were talking offline, um, we were talking about this idea of like whether or not these particular three, Bitcoin, ETH, and Solana, are sort of analogous to traditional market like value stock, growth stock type archetypes.
Mm,
And I think I can see that, like particularly with Bitcoin being like the value stock, the way that I think that these labels get kind of like misassigned, but the way that I think about like value and growth is like it's not about like the price to sales multiple, the price to earnings being high. It's really about like you look at the total market cap and you identify two components of a total market cap. You have like the business as it stands today, and you can do like a discounted cash flow on what a business is now. And then what the remainder of that is called like they call it a PVGO. It's the present value of the growth opportunities. Things that aren't priced in the business today is sort of like that remainder. So you do a discounted cash flow. What is the business now? The remainder is like this like esoteric growth idea. And I think with Bitcoin, that's a pretty good example because I think all of its market cap is kind of like what we understand the network to be today. It's like it's this really safe, decentralized way to trade, digital money that is, has a better monetary policy than fiat. So we get that, and that is sort of like entirely based on today's model. Whereas Solana, on the other end of the extreme, it's like it has a market cap, and the protocol today like doesn't do anything. And I think ETH is somewhere in between those two, where like ETH is something, right? We know that ETH has like it makes blocks and it does it in a decentralized way where we can put things on there one day, but it is still mostly like this like PVGO idea. It's like this really growthy thing. And I mean all of crypto is kind of like that. But I do see the sort of the differences within that.
yeah, and I think you're saying like you don't necessarily mean that there's literally nothing happening on Solana. It literally doesn't do anything. You're sort of saying that the activity on it, the usage on it currently is very, very, very far off for where it would have to be to sort of justify it from like a value perspective. And you're sort of saying that this thing is priced like analogous to a growth stock where there's not anything there today, but there's the thought that all this stuff will be there in the future, right?
Yeah, yeah, and I think it's very hard to like value these networks. I think like every time we've tried or every time anybody's tried, we've like found holes in them. But you can take like fees from the network as one proxy, and that's just like a very simple one to look at. Like ETH's is ETH's making 80 times more fees than Solana, and Solana's, you know, 1/10 the market cap. So I think it's like basically what I'm suggesting is that it's pricing in more of this like growth because it doesn't have the fees now. And I think there's many holes to poke into that like fee model, but that's just
Yeah.
one simple way to look at it.
I think I have a similar take to you. I kind of I kind of view Bitcoin like almost just as like entirely like a commodity in a way. Gold, I guess,
Yeah.
boring, but it kind of is what it is. Like that's it's the best analogy at the moment. Um, definitely view. I really like this idea of Solana as a growth and ETH as value, which in the real world makes no sense, but within the crypto bubble, like sort of does make sense. And this is something I think I heard Chris Bernisky say, and it resonated a lot with me. I was like, oh yeah, that's like actually how I think about this.
Yeah. So how about this? Like, something can start as growth and then as it evolves can turn into value. I think like Apple's a good example of this, where like, its business sold those fucking Mac desktop computers and was kind of like failing. And then it came out with the iPhone and nobody knew how big that was going to get. So it traded as like this growth stock where we were like trying to, in our minds, dream on how big the iPhone's going to get. So it had like this massive multiple and, it still wasn't generating the sales. But then over time, it does grow into this massive thing. And then it starts to become more of a value stock because we're we're assigning a market cap to it based on its cash flows from this iPhone, essentially. And I think ETH's going through that evolution where it was like, oh my God, smart contracts. And now we're seeing sort of it evolve and we're saying, okay, so these are the smart contracts that are actually useful and more are coming online. I think it's moving towards value. And that doesn't mean that it's like gonna die. I think that's fine. Like Apple's fucking huge and it's like gone through this evolution.
Yeah, I think the problem I have with this is it has nothing to do with Solana at all. It's just that this analogy falls a little short for me in crypto because even though there's no revenue today in, both of these things or no profit or whatever you want to call it, right? There's not really any, it's not like an economically viable business in the present, whether you're talking about Solana or whether you're talking about, I don't know, name your random tech high flying DoorDash or something. Um, but when you have a stock, like you do have a tangible thing that will happen in the future. Um, even if it's not there yet, like like, oh, there will be cash flows. The cash flows can be discounted, and that could give me a theoretical valuation, right? So although we are pricing in future growth with something like Solana, right? It's not the same because what are the cash flows? And to be clear, this is also a problem I have with how people talk about ETH right now. Like it drives me crazy when people put like an earnings multiple on ETH, right? They're like, oh, we burned X amount of fees and that's like $10 for every $100 of ETH. That's a 10 to 1 PE. And it's like, well, no, it's not because the earnings are like recursive to itself. Like you're earning the thing that it's valued in. It's this sort of like infinite loop, and it's not obvious to me that you can actually put a cash flow on that in the first place. Um,
I think I would push back on that. I think you can. Like it's just hard to analyze it like from an outside perspective, but I feel like every ETH burned in that moment represents a US dollar value like in that exact moment. And you can just like aggregate those.
yeah, it does, but like the value of that ETH is dependent. Like the amount of dollars is dependent on the value of ETH, which is dependent on so like I haven't seen anybody do a good model on this, right? And
No,
it's
me
clear to
neither.
me that the market is pricing it somehow. Like the market, I think, is assigning some value to it. I don't know how the market assigns that value, but there is something there. And Sol has, copied a lot of the core elements of ETH tokenomics. So if Sol has like the same metrics ETH has, but like scaled way up, and they're able to do that, and like then yeah, I guess you'll have a similar burn thing going on. I haven't run the exact numbers on like what that, but I know it's like very, very big numbers, right? Like I'm just thinking this cycle, and I'm like, okay, like I know how this goes with growth stocks. They often moon, they almost always moon way harder than value stocks because they trade on hopium.
Exactly.
There's nothing to anchor their price down, right? Like one of the curses ETH has is now that people look, they can look at the burn and be like, oh, there's no burn happening. We
Right.
shouldn't be buying this thing. It's inflationary. Like Solana doesn't have that. It's always inflationary. It's never profitable in the present. It's about like the future hopes and dreams of and what it could be. And that's like powerful because like it's you're just trading narrative, baby, and it goes up, 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 and up. But like in the real world, like growth stocks, at some point they run into some exhaustion catalyst where that like can't be sustained. There's like a realization by the market that whatever the future is being currently priced in, it's not going to happen anytime soon. And then it goes like just
And then
way off the deep end.
it implodes.
It's
And
like
then
seems so obvious to me that that is what is going to happen to Sol at the end of this cycle. And like
I
anybody who
completely
is
agree. I
holding it
completely agree.
through
And
the
like that
whole
doesn't mean
cycle
that
never
it's
sells anything is, you know,
it doesn't mean that it's going to die long term either. I could be like a
no,
soul bull
absolutely
long term,
not.
and I could say like, well, it's just going to go through that same mechanism where it pumps and then it fucking crashes. But eventually, if this thing actually works, just the same way ETH too, like if ETH gets the demand and the use case, then it will sort of turn into that value stock that actually has, like a stable, sustainable cash flow business, I guess.
Yeah. Yeah. And I don't know, like I feel like we repeat the same cycles, like, and we just change the name of the coin, and like a new group of coins that they play the same roles every cycle. Like last
Yeah.
cycle, it was ETH being Sol this cycle, right? Sol this
Yeah.
cycle is going to be ETH last cycle. It
A
was
lot of
like a
people
kind
called
of a
that. A lot of
lot
people
of
called
people
that
called
too.
that, a lot of people were saying that. I was saying that. Did I hold my soul that I bought? No, of course not, because I'm a fucking moron. My paltry little stash here. But like I was like, yeah, that's like I see history, it just always repeats. It's the same thing. And now Ethereum's like are doing something akin to what the Bitcoin maxis did last cycle to Sol, right? Now I don't think it's as severe as what Bitcoiners did, because I think there's something about Bitcoin that like makes you just inherently like intellectually hardened as a person and like not open to new ideas and experimentation in the same way that that's what the chain does, right? Whereas like ETH was like built much more on experimentation. And I don't think it's a fair criticism to say Ethereum maxis are being exactly like Bitcoin maxis now. It's not true. There's some parallels there, right? But in the same way, like even though Solanans that they're having their moment in the sun now, they're like, yeah, we're the hot new kid on the block. They're going to make the same mistake, which is like overestimating what is actually going to happen as far as actual growth and adoption in the short term. Maybe by even underestimating it in the long term, but in the short term, it's going to be like Wile E. Coyote running off the cliff and then suddenly looking down and there's nothing there. And then whoop. And it's
I
so obvious that that will happen to me.
I completely agree, and it will happen to like, it'll probably happen to ETH too, to be honest. Like, because Max in the chat brings up a good point. He says we need organic block space demand. That's true across all protocols, essentially.
Yeah.
And
And
until we find that, we're playing that same Wile E. Coyote game.
yeah, like look, ETH is interesting because it's just sort of like a economically sustainable chain as is. There's no subsidies. Like there is like Solana is like they're always like pointing at the high block space as evidence of why it's broken. But like I look at it and say, oh, this is like evidence of product market fit. Like there are people willing to pay for this block space in a way that doesn't need to be subsidized, right? And then the coin is deflationary. Whereas on Solana, they're subsidizing validators. The coin is like very inflationary at the moment. And I don't think there's anything wrong with that. Like this is what you do with any tech startup. You subsidize growth in the beginning. None of these companies are profitable, these super high growth companies. So there's nothing wrong with that. Nothing wrong with that at all. Like people just need to call a spade and not be delusional about it, because that can really help you when it comes time to take profits. You really get high in your own supply.
I think like you're right, and I just want to circle back to a thought I had about Coinbase, because we're talking about these like high growth companies that ultimately need to find this like organic demand for block space, right? So in this bull market, the price can zoom, but it still never finds that like real fundamental value, right? But I think like in a bull market for Coinbase, um, price will go higher just because bull markets are doing that. But also like trading revenue goes higher, and we got custodial revenue, et cetera. And like their business is fundamentally being proven in real time, whereas these coins are like, I don't know if we're gonna even find like a true product market fit this cycle.
Yeah. Yeah, coins some like nice diversification away in a little bit. Like it's not diversification away from crypto, but it's diversification like away from Ethereum, away from any specific coin, because Coinbase is just in the business of crypto, whether that be Solana, whether it be Ethereum, whether it be whatever coin that people want to trade. Obviously Coinbase has hitched their wagon to Ethereum. They chose to build Base, which is a layer two on Ethereum. And I do think that like previously, like the big thing about Ethereum was that like it's cool because you can buy it and it's an index of all the coins. It's an index of all the coins people want to create and all the apps. And it still is going to be that. I think Solana is going to start moving into that a lot. It's going to be an index of all of the cool apps that people build on Solana. And I think a lot of those apps will have like use cases that we can't do on Ethereum, and that's cool. But what Ethereum is going to start doing is like being like an index of layer twos. Like if every large business you can think of starts to build their own layer two on Ethereum,
Mm.
it could be very accretive to the value of the token.
I can agree. I
And
mean, I agree with you, but I don't think
yeah,
that's the future. I think the future looks a little more like the present, where you have these incumbents who have their walled gardens, and they don't want to just acquiesce to fully decentralized solutions. Like they want to still maintain their little walled garden and their own data and stuff, but with some advantages of the blockchain, like immutability or transparency in some cases. And I think really like what I'm sort of considering is like how they can do that and sort of like play with decentralized money at the same time, and sort of like be able to transfer back and forth. I feel like it's Chainlink. I feel like Chainlink is sort of talking to that narrative where it's not like a fully decentralized future.
yeah, I agree with that. And like I like Chainlink. Like my like basic bitch portfolio is like Bitcoin, Ethereum, Solana, Chainlink. Like if you want to buy like four coins, I think it's pretty good coverage. You got Bitcoin, it does its own thing. Ethereum is the kid trying to do all the crazy optimistic stuff, and he's the dreamer. And then you have a Solana in there as like the hedge in case like Ethereum like trips over itself, which it may do. All this technology is very early, and I think it's very dumb long
Mm,
term to hold 100% Ethereum and no Solana, because there could be some instances where like Ethereum kind of fails and Solana does like a 100x relative to Ethereum. And if you only have like 5% of it in your portfolio, you'd be totally fine. But without that hedge, you're now ruined. You put all your eggs in the ETH basket. That's not super smart. And then Link is also kind of doing its own thing in a way. And I like that it kind of gives you exposure to this hybrid world of crypto and like, like TradFi in the way that we currently use it. I think there's going to be tons of use case of crypto. I think the vast majority of use of crypto is going to be in these sort of pseudo walled gardens that aren't like Bitcoin decentralized. And I think that's fine. And I think you want exposure to that. Like betting on only Bitcoin is basically betting on a world where like none of that ever happens, or like for some reason everything just does eventually get built on Bitcoin, even though there's no indication that's happening at all.
yeah.
Doesn't make any sense to me.
So I like this. This is the Bitcoin ETH Chainlink Sol portfolio, BEX. It's I think an improvement on Vance Spencer's smell portfolio. I would take the BEX all day.
What does it smell? Is it synthetics maker, Ethereum,
uh,
Lido?
Lido, yes, and Link.
Oh, okay. So he's got no L2s there, huh?
No, no. I guess he was just talking about the worthless Gov coins mostly.
Hmm. Lido is interesting. Lido looks pretty good, even on the ETH chart to me right now. Um, it's like an interesting question. Like if you know the BTC ETF is coming, then it's kind of a better play to just buy ETH because it also means the ETH ETF is coming, right? So that was actually the play, and is still probably a good play with the current relative pricing of ETH to BTC. But then it just makes you wonder, like, if the ETH ETF is a thing, well, then do just fast forward to like just going all in Lido. Does Lido
Yeah.
end up being like the really institutionalized like Ethereum staking coin that everybody wants to own? And it's like, oh, it's higher beta Ethereum, and you get like
So I guess my question to you on that is that another like Wile E. Coyote where it's like the narrative outpaces the fundamentals and then you get the fucking fall off the cliff, or do you actually believe that the fundamentals are improving under this scenario to a level that supports higher prices?
so I really fundamentally believe that in the long run, right? If your coin's going to be successful, if your coin's going to be worth like $1 trillion, it needs to find institutional demand. Like you can't just rely on like, Reddit forums to just turbo pump your coin constantly. You need institutional demand, you need structural flows into those assets in the same way you have structural flows like into the S&P, right? Um, so I do think like this idea that this is the institutional cycle is a good narrative. I think that is the case. And I think there are a bunch of coins that tie into that very obviously. There are some that may tie into it, and then there are some that I think like definitely don't at all. And I think it's very, very like just taken as a given that ETH is going to outperform Bitcoin, and like pretty much every alt from the bottom is going to outperform ETH. And I don't know if that's the case. Like I do see a scenario where you get an ETH ETF and the institutional demand for ETH is just it's just such a tailwind to like its price that it actually outperforms like even like a Solana. Like I think that's a possible scenario. I think nobody thinks that's going to happen, which means it's probably more likely than it is. But I know people will say the other side of that argument is like, yo, ETH is it's very consensus. It's a consensus buy, which is true. I don't disagree with that at all. But like sometimes these consensus plays like are actually really good. Sometimes the consensus plays are the strongest and the most obvious plays over long time periods, and it's funny how that works out sometimes. Those things align.
I think I agree with you that on the ETH squeeze kind of. I think I would push back on the Lido one a little bit just because I think institutional demand does come in and they do want staking yield, but I don't think they do it on chain. I don't think they do it through Lido. I think they do it through Coinbase.
Yeah, I'm not saying institutions are going to buy Lido because they want to stake. I'm just saying that ETH has yield. Yield is a very big deal in TradFi, as you know. The thing that gives them direct access to yield in a particular way that is a token is Lido. So I can see that happening. I can see some, I don't know, maybe there's some like interesting future where like ST ETH becomes like an ETF like product. I don't know. Like I can imagine there's some outcomes out there that like I haven't like thought very deeply through that may happen. Like that's kind of what I'm thinking for it. I don't have like extreme conviction on this idea. I think the chart looks good, and I think this narrative like kind of makes sense and is worth exploring. Um,
You like
yeah,
that idea. You make an ETF out of staked ETH. It's always liquid anyways, so could work.
yeah. And I think there's some other coins that are kind of dark horse institutional plays as well. Like Kanto is interesting, because they're staking the whole chain basically on bringing treasuries on chain for the most part. And then you've got
Product
coins
we've
like
always wanted, yeah.
yeah, you got coins like Maker, which do things that TradFi people understand. Like they have cash flows. A lot of those
Yeah.
cash flows are in dollars. They have nice treasury. And they are already interacting with non-crypto assets, right? Like a huge chunk of Makers already has like one foot in TradFi anyway, so it's like easy for me to see how like an app like that could be embraced. Um, Aave is a similar thing, right? Aave has been doing a lot with like one foot in the TradFi world. Like a huge use case of Aave is USDC, like borrowing it and putting it on there, and that's not a purely decentralized thing. So a lot of these things are kind of one level, and like as you mentioned, like Link kind of meets that qualification too.
Yeah, all of these we kind of talked about it maybe like 2 months ago on Alfalfa, talking about like the .com bubble bursting and like flushed out all those internet stocks, but a few of them survived. 20 years later, still around, and they're huge. I do feel like those ones that you just mentioned like are good candidates.
Hmm. Do you have a good like metric for people to just like back of the envelope? Like if somebody's like, okay, this all sounds well and good. I'm sold. I want to buy Ethereum and I want to buy Solana. Let's just start there first because that's easy. How do you go about thinking like how much of your portfolio to have an ETH and how much of your portfolio to have Solana? Is there like an analog to this in TradFi when you're making a portfolio?
I mean, it's so unique. It's got to be tailored to, everybody's going to be different, right? So it's hard to just give like a blanket answer to that.
Do you think there's merit to just doing like a market cap weighted ratio? Like if ETH is 10 times the market cap, then you buy 10 times as much ETH.
Pretty simple framework. Um, I would like approve of that just because I sort of prefer ETH from like a risk reward basis. So I think that makes sense. But I wouldn't want to include Bitcoin on a cap weighted allocation. Just too
Yeah, I
big.
feel like Bitcoin doesn't even belong in a crypto portfolio. I feel like it's just like its own asset class at
It's
this
like a,
point. Like I
a
don't
little
think
gold.
about, yeah, like I actually don't think about Bitcoin as like a percentage of my crypto portfolio. Like to me, Bitcoin is like it's like this digital commodity. It's interesting. I put it in its own bucket. And then my entire crypto portfolio is basically denominated in Ethereum. And I start off not with 100% Bitcoin, but with like 100% Ethereum. And then I'm trying to think like, okay, how much of this other stuff do I want
To make more ETH.
in relationship to my ETH? But like sometimes when I'm like, oh, I want to make more ETH, like sometimes I'm doing that by like perps trading or something. And a lot of the times I'm making like a spot portfolio. Like I really don't want to sell it other than like one time. Like I want to really buy spot coins that I don't have to deal with like checking all the time and get in and out. Like it's just like mentally exhausting, right? And like something like Link, yeah, I feel like you could just hold forever. It's probably fine to just keep forever. Some portion of Solana is definitely fine to keep forever. But if you're loading up on some hot new GameFi token or something, there's a
Then
good
be ready
chance
to
you want
trade
like
that.
close to zero of it, but
Yeah.
well before the market is over and it just becomes like additional like mental weight for me to juggle.
Yeah. Calcium's asking, do you think Sol has short term? Has it stalled or will it continue to march upward?
I mean, it depends on your definition of short term, and it also depends on what Bitcoin does. And I think Bitcoin is a little questionable at the moment, as we talked about earlier. Not that I don't think it's going to go a lot higher, but like I do see potential for like a nasty pullback in the short run. It's not something I'm super actively trading, but more like I gotta be careful. I don't want to FOMO into stuff up here. Solana being one of those things. Um, you're definitely starting to see signs of exhaustion on the chart. You're going from these like clear, steady uptrends to these erratic moves with like big wicks, and when you zoom in on lower time frames, you can see like it's noticeably less strong. Like this is a very strong, and then up here, you're getting a little
It kind of does
choppy.
looks like the
Um,
last gasp on that push. That last push
yeah,
is
and the
feels
other thing
weaker.
that shows up on the RSI, right? Like you can look at this high. That's a very strong leg, and then look at this high, right? So like I don't use RSI a lot because you can kind of just see the RSI. Like I can see that this is a new high with a much weaker move, right? Like I don't need the RSI to show me that. But you can, still use the RSI because it helps you a little bit with that. Maybe like yeah, so it's pretty clear on the 12, right? So if I look at the 12-hour chart, price is making higher highs, right? The RSI is making lower highs, right? So this is a bearish divergence. It's not something that you just short because you see this. Like there has to be some additional context to it. Like for example, if this line was like a really significant monthly level, and then price came into it like this, like it takes the level, but it wicks up and then it dumps down into this gap and then makes another push up, but it's kind of weak and then gets back below it. Okay, now if I see this in the context of the higher time frame level, in the context of the price action I'm seeing, and if I especially start seeing like structure breaks on the lower time frames, early indicate, like if you pull up the hourly, the 12 hours, like, okay, I guess, high, low, you know, I guess somebody who's equivalent would be like, well, there's a big gap there. It's a sign of some strong selling. Um, but if you look at the 1 hour, like it's very clear. You've got very obvious. I mean, I guess technically on the 1 hour, like this is a structural low as well. Obviously this one too, right? So price very sharply takes out both of these. It's trading into this demand here, so you're not going to really want to short here. It's probably going to bounce a bit. We'll go back to new all time. I know this is some of the nuance of it, right? But when you start seeing this is early signs of maybe something's happening here. Maybe I want to watch out. Like structurally, it's still fine, right? Because on a 12-hour structure, this is your protected low. You got a new high here that closed above, right? Structure is intact technically. But if you have the RSI, if you have a swing fail above a high time frame level, if you have some weak looking price action on the lower time frame, you can start maybe getting ahead of that trade. And often like price doesn't just go in one straight line. Like often you get a break of this level and then you trade higher and come down, or sometimes you break it. Sometimes you even like run this high and then a sign of weakness and then come down. Like the stuff doesn't follow like an exact blueprint. You may be using like Wyckoff distribution or whatever you like to use, right? There's a million ways to skin a cat here. But like the really basic principles are a knowing your market structure, high time frame, low time frame. High time frame structure is dominant over lower time frame structure. You can't just short this thing to $20 because you have a structure break on the 1 hour when the 12-hour looks like this. That's not how it works, right? But then also context within higher time frame levels. And if we zoom out, like there really is no level here. Like we're in no man's land on the monthly. Like we took that high, we're well above it. There's a huge gap here on the monthly. So not crazy to think we might have a pullback on this area. Like these areas tend to act as at least temporary resistance. Sometimes you can zoom into lower time frames and see if you see anything. But again, like the selling on this was so strong that it's just a straight line down. So you're not working with a lot here. So in an area like this where it's no man's land, I'm often waiting for some sort of structure to form on the lower time frame, right? So you may see a structure form that looks like this, where you break this low and you come up and you put in a lower high and another lower, right? This is a bearish structure. And if when this leg happens, right, you also get like a gap in here. And when this leg happens, you also get a gap in here. So you're getting a structural breaks, you're getting gaps. Like, these are warning signs, right? And if things play out to a T, which they sometimes do, but really don't, right? You often can break structure, get a retracement, short up in a premium of this leg, you play stops above the high, and you ride it down to a target. Easy mode doesn't always happen like that. It's not quite that easy, but that's like the general framework you're looking at. Hopefully that helps at least as like a higher level thing. I mean, I could talk about this stuff for hours actually. Timothy wants me to throw some Elliott waves on this. I've never used Elliott waves in my life. I still there's still like a voice in my head when I see Elliott waves. Like I'm just like this guy's just trolling me. There's like no way this means anything. But like I'm sure people probably think that when I put like SD projections on charts and stuff. So uh, to each his own, I guess.
Well, cool, man. Do you think you can still get your pickleball in, or
No, I am going to once again be pickleless, and it is a darn shame. But I felt obligated to give the stream to the people after they sat in the chat for 90
that was
minutes
really impressive.
waiting. I couldn't rug everybody after that. Um, I kind of like the Zoom stream. I mean, it's kind of fun. Got the
I like it too, man. I like
got
our little
the
two heads down here beneath the charts. It's kind of cool.
yeah. I'm like kind of a fan. I'm just gonna get rid of that giant Zoom logo, I guess, and we need to replace the fireside with something a little more a little
Right.
more on brand. All right, did you have anything else you wanted to hit, or do you want to we could always save it for next time if you don't think it's super critical.
Yeah, let's save some stuff for next time. We got some good stuff for later. I think this is a good place to wrap.
Yeah, it's very hard to keep the show short. Keep saying I'm going to do like a 45-minute show, and then it's
Yeah, dude.
2x the length like every freaking time. Um, all right, cool. Well, thanks everybody for coming. If you enjoy this, you got value from it, please subscribe. Please give the video a like. It helps out a lot. We are trying to do more content, trying to get a little more discovered. For those of you who don't know, we have a Discord as well where we hang out. We talk about money, but we also talk about like everything, philosophy, technology. It's a cool place. You can check it out at alfalfapod.com. And then we obviously do the other pod if you're new to the channel, the main pod, the Alfalfa podcast, which we stream Wednesdays at 5 Pacific time if you want to hang out with us then. But yeah, good luck in the markets until next time. I hope things get a little less nasty than they were today, that's for sure.
Yeah, I'll be looking for all those levels you pointed out, man. Thank you.
All right, man. Well, you have a good rest of your night, and
All right.
see you later, everybody.
Bye, everyone.